Hello, good people. It's me, your money manager, Kumo Nawa. The financial services industry is a giant web of companies all intertwined to facilitate the flow of money in the economy. It is probably the most important sector of the economy, and if not managed well, it can bring any economy to its knees. Today in this video, I want to bring it a little bit closer home. I want to demonstrate to you how your pension funds are flowing in and out of this web of companies. I think you need to pay particular attention to this because we are talking about your hard-earned money, the money that you work so hard for every day, 8 to 5. So you need to pay very close attention to this. Let me show you this demonstration. This is a little demonstration that I have prepared for you to show you how your pension funds are flowing in this sector, in the financial services sector. Here we have you as an employee and we have your employer here. So every month when you receive your salary, you contribute a portion of your salary to a pension fund to which you are a member of. You contribute, normally here in Botswana, we contribute in 5%. I think this is the common contribution that we're making. However, we are allowed to contribute up to 15% of our money. And these are tax-free contributions that we are making to the pension fund. Our employee on the other side is also going to contribute on our behalf. 15% is what they're contributing. So you see that the total contributions that you are making every month would be a total of 20% or more if you decide to contribute more than 5%. This pension fund here is a separate legal entity from your employer. We need to understand that they've got separate assets, that's two separate entities. And this pension fund here is managed by what we call trustees or a board of trustees. Once they have collected this money from you and your employer, they will now take this money and send it to the fund administrator. Every time money is moving from here to the fund administrator, there's a bank involved. The money is flowing through a bank. And then let me just take you back. So here, the contributions that are going in here, the pension fund will have a bank account. So this is where the money is going to go. And the money will move from here to the fund administrator. So the fund administrator here is responsible for facilitating collection from the pension fund, into their fund, and also for distributing money back to the pension fund members in a case where maybe you have retired and you need to be paid a monthly pension. So they will facilitate that. And then maybe you also leave this pension fund for reasons that you are no longer employed by this guy here. Then the fund administrator will facilitate that you get your pensions. You get maybe your 1/3 and then a portion of it can remain in the fund or it can go elsewhere where you choose it to be. Now let's pay attention to here. This guy here, being the fund administrator, is not just collecting the money and sitting with it. This is money and it needs to grow so that once you reach your retirement age, you have this sizable pot that you can now live off. So the fund administrator is going to go out into the market and look for what we call a fund manager. A fund manager, normally we call them asset managers. So these guys here, they will now be responsible for the growth of your money, for creating value, for making sure that your money grows over time. How do they do that? They are going to take this money, invest it in different asset classes. They can choose to invest it in stocks, they can choose to invest in bonds, to invest in real estate, to invest in cash, or even alternative investments. Let's pay particular attention. So if this guy here is going to choose to invest your money in stocks, they are not going to go directly to the stock exchange and buy stocks. They are going to do that through a broker. We see now there's a broker here. You're going to do that through a broker. And if this guy here invests your money in bonds, some bonds, they can be bought through a broker, which are now, we're looking at listed bonds because some bonds are listed, but government bonds, mostly they're not listed. So this guy here, when now they invest in bonds, they're going to go to the primary dealers. And the primary dealers, these are commercial banks. These are commercial banks. They will go to the commercial banks to buy bonds for you to invest in bonds. And then let's say now this guy here, a portion of this money is invested in real estate. This guy here, the fund manager, is not going to actively go there and then start building and then get involved in construction. No, they are going to look for a property manager, or they can look for a fund that invests in property, and they will give the money to this guy here, a property manager, to manage it. And then if they invest in cash, because cash is also an asset class, so when they invest in cash, it means they're now going to inject the money. They're going to put the money in a bank account. So this is now money invested in cash. They're either going to invest in a money market account, they're going to do a fixed deposit with a bank, and they'll get a little bit of interest from that. So this is cash. And then they can choose to invest in alternative investments. Let's not talk about alternative investment. However, they will still say, okay, we can invest some of the money locally, but we still need to make sure that we are diversified, and we still need to make sure that we are optimizing and we're really making as much money as we can from this money. So they can also decide to take a portion of the money and invest it offshore. Offshore is outside. So when they invest offshore, sometimes they're going to have to do that through a broker, and sometimes they're going to have to do that through a fund manager who is based outside, or who's based in a country where they want to invest. However, while they're doing all these investments, more especially stocks, when they're investing in stocks, they need to appoint what we call a custodian, because there is a requirement for segregation of duties to make sure that the transactions are being reported accordingly, and to make sure that there is also a separation of assets for the pension fund and for the fund manager. So they'll have a custodian, and a custodian who are offering custodian services in the market. Banks are offering custodian services in the market. And we see now this, how all these companies are intertwined and are all working together. And sometimes you even have an insurance company here. And someone might be wondering, but where does the insurance company feature? It does feature because they offer retirement annuities. So in a case where you are a member of a pension fund, and when you reach your retirement age, your lump sum money accumulated maybe is 3 million. So you're not going to be given the entire money. You are given 1/3 of that money. The rest of the money is going to be used to purchase what is called a retirement annuity, which is provided by the insurance company. So you see, everyone is getting a share of what? Of this money here that is coming from you, as the employee. So now let's pay attention to now what is happening. We're doing a reverse movement to demonstrate the fees. So every time there's movement of money here, there are fees involved. Nothing is happening for free here. Nothing, everyone is benefiting in the form of fees. So this guy here, when he appoints the broker, this guy is going to pay a brokerage commission. Everywhere this guy is dealing, there's going to be a fee. So who exactly is paying this fee? This guy is not paying this fee. This guy is not paying this fee. This guy is not. You are paying all these fees. This is what happens. Let's just take it here from the broker. The broker will charge a fund manager, right, a fee for buying and selling on their behalf. So this fee that the fund manager has been charged, what they're going to do is they're going to take the fee, add a little bit of their own margin, and then pass on the fee to the fund administrator. Do we get that? The fund administrator will get this fee from the fund manager, add a little bit of their margin, and pass on the fee to the pension fund. And then here we go. Remember, we have said the pension fund and the employer are two separate legal entities. So the pension fund now will have to deal with the fees. And how do they deal with the fees? It means that a part of your contributions are going to go towards covering the fees. All the fees that are involved here, you are paying for them. And then let me just bring something very important also closer to you. So when this guy here decides to invest in cash and cash equivalents, that is putting money in a bank account. guess what is going to happen? The money is not just going to sit in a bank account. The bank, what does the bank do? The bank is going to lend this money out to you. You're going to take this money as a loan and you are going to pay interest. Whose money are we talking about here? This is your money. It started here, flowing this way, flowing all the way like this, flowing all the way like this. And you're also going to get it from here as a loan, and you pay. You pay for this loan over and above the fees that you have been paying to all these guys. So you see, like I told you, this is just the whole web of transactions that are going on a day-to-day basis. There's a lot of movements of money in the economy, and this is your money. This is why I have said that you need to pay attention to your money. You cannot afford to be a passive participant. You need to be actively involved in how your money is flowing and in how your money is managed. I hope that this has been eye-opening to you, and you will start asking the right questions and you'll start seeking relevant information. With that demonstration that I've just shared with you, I want to leave you with 3 important things to think about. Number 1, do you even know where your pension funds are? Number 2, do you know how your pension funds are invested? And number 3, do you understand the participants in this giant web of companies? This is very important. And the last thing is, I want you to be an active participant in this whole industry, because currently what is happening is we are passive. We are just waiting to be told this is where our money is, this is how our money is invested, and then this is what you are likely to get when you retire. We need to pay particular attention, because in this day and time, people are living longer. And what is going to happen to you if you outlive your pension? Think about this. Please leave me with a like, subscribe to my channel so that we can continue sharing this kind of education. We all need to be financially educated, and that is the intention of this channel. Thank you very much. I will see you in another video.